AI chip showdown just went nuclear. From Trump meeting Nvidia's CEO, to U.S. Senators trying to slam the brakes on China exports, to China's own Nvidia soaring 400% on IPO day. Want to know what that means for the future of AI power? Stay tuned. Jensen Huang visited Washington, D.C. this week and met President Trump for a private discussion focused on U.S. restrictions on exporting advanced Nvidia chips overseas, especially to China. Trump later confirmed the meeting, calling Huang a smart man and mentioning discussions about Nvidia's highly demanded chips. At the same time, Huang also met with several Republican lawmakers and senators because Congress is currently reviewing and debating proposed changes to export control rules. Export controls are U.S. government rules that limit which advanced technologies can be sold to countries considered high risk, mainly China. Why does this exist? Because AI hardware, especially powerful GPUs, can be used not only for tech development but also for military modernization, surveillance systems, strategic national AI development. The U.S. government wants to slow down China's access to cutting-edge AI computing, and Nvidia is the main company affected because their GPUs dominate the market. In 2023 and 2024, the U.S. restricted Nvidia from selling certain high-performance chips to China, including versions of the A100, H100, and even the supposedly China-safe modified versions like the H20. Now, in 2025, the debate has shifted to even newer hardware, including the H200. There are two major reasons. One, Nvidia wants clearer rules. The company has been hit repeatedly with sudden, evolving restrictions. Every few months, the government tightens or updates the rules. This creates uncertainty for Nvidia and its global customers. Two, Nvidia wants to avoid over-restrictive bans that hurt business. China is one of Nvidia's largest markets for data center GPUs. Even though U.S. policy aims to slow down China's AI growth, Nvidia doesn't want total sales shut down. Huang's job is to push for balanced rules, restrictions that protect national security without completely eliminating Nvidia's ability to sell chips internationally. The administration is reviewing whether Nvidia should be allowed to export H200 chips abroad. They're evaluating how much computing performance can be safely exported without boosting China's military AI capabilities. They're consulting both the Commerce Department and national security officials. This meeting is important because Nvidia is currently the heart of global AI hardware. If U.S. policy changes, China may face slower access to advanced AI compute. Nvidia may need to create more cut-down versions of chips for export. Competitors like AMD, Intel, Huawei, and new Chinese GPU startups might benefit. U.S.-China tensions in AI will continue to rise.
Okay, so let's move on to the next news. On 5 December 2025, more threads listed on the Shanghai Star Market. The IPO raised about $1.1 billion, or about 8 billion yuan. The shares were issued at 114.28 yuan per share. On debut, the stock opened at 650 yuan, more than 5 times the IPO price. During the session, the price even touched near 688 yuan. The gain, a surge of over 400% on day one, is widely described as one of the biggest first-day pops in China's tech IPO history. High demand for domestic AI chips. With export restrictions limiting supply of top-end foreign GPUs to China, there's a strong push to build homegrown alternatives. More Threads fits that narrative. Analysts say More Threads could become a key force in China's effort to replace foreign chips with local technology. Government and policy backdrop. Tech self-reliance. listing requirements on Shanghai's STAR market have been relaxed for strategic sectors like semiconductors, enabling firms like More Threads to go public even if not yet profitable. Given ongoing restrictions from the U.S. on advanced chip exports to China, a domestic GPU company has become politically and economically attractive. Hype and moonshot expectations. Many investors are treating More Threads as a once-in-a-generation opportunity, a GPU company from China that could compete globally. That has fueled FOMO, fear of missing out. Even though the company is not yet profitable, in fact it has posted losses, the potential upside appears to outweigh near-term risk, at least in investor sentiment. More Threads is not yet profitable. The company reportedly posted a net loss over the past few years despite rising revenues. Its IPO valuation was extremely aggressive. At one point, the price-to-sales ratio was around 123x 2024 sales. That's high. The company now has a lot of capital and expectations, but it still needs to prove it can deliver competitive, high-performance chips, scale production, and gain meaningful market share, not just in China, but globally, if that's the ambition. There's a risk that if performance or execution falters, or if global competition intensifies, this could turn into a speculative bubble rather than a long-term success. More Threads' debut signals a serious push by China to build self-reliant AI chip supply chains, reducing reliance on Western chip makers. That could reshape the global supply chain ecosystem. For AI companies, especially in China, this could mean easier access to high-performance GPUs domestically, potentially lower cost and less dependency on imports or foreign export permissions. For global chip makers like Nvidia, AMD, etc., this intensifies competition, a homegrown alternative backed by government, investors, and demand.
Okay, so let's move on to the next news.
A group of U.S. senators, bipartisan, that means both Republicans and Democrats, have introduced a bill called the Safe Chips Act. The lawmakers pushing it include Pete Ricketts, Republican, and Chris Coons, Democrat, and it's co-sponsored by others from both parties. The unusual part, this is a case where some Republicans are pushing to stop a move by the current Republican administration, showing just how serious this issue has become. For the next 30 months, that's about 2.5 years, the bill would force the U.S. Department of Commerce to deny any license requests to export advanced U.S. AI chips to countries like China, Russia, Iran, or North Korea, beyond what's already allowed. After that period, if there are any proposed changes or relaxations, Commerce would first have to inform Congress at least 1 month before implementing them. In short, the bill aims to freeze exports of high-end U.S. AI chips to adversary nations, preventing potential loosening of export controls that the administration might be considering. The bill comes amid renewed debate because the current administration has shown interest in easing restrictions on some AI chip exports, notably chips from firms like Nvidia and possibly AMD that had been previously restricted. Some lawmakers and national security advisors argue that selling advanced AI chips to China could help Beijing accelerate military AI, surveillance tech, or other strategic capabilities, a major risk for U.S. national security. So, the Safe Chips Act is essentially a preemptive effort to ensure that the U.S. doesn't quietly loosen export rules under pressure or business interest. If passed, the bill would likely result in no sales of cutting-edge U.S. AI chips to China and other restricted countries for at least 2.5 years.
That means firms like Nvidia and AMD, big players in AI hardware globally, may lose access to major Chinese and other international markets for high-end GPUs. Stronger U.S. control over AI hardware exports, limiting global diffusion of top-tier compute power, potentially hard-slowing the pace of advanced AI hardware proliferation globally. Acceleration of non-U.S. chip alternatives. If China and others are blocked from buying U.S. GPUs, demand could shift to domestic or third-country chip makers in China or elsewhere, pushing the AI chip ecosystem towards fragmentation or diversification. Strain on global AI research and data center markets. Global companies relying on U.S. chips might find supply limited or unpredictable, could affect cloud providers, AI startups, research labs worldwide.
That's the breakdown of everything shaking the global AI chip war right now. If you want to stay ahead while the world rewires its tech power, make sure to like, subscribe, and stay locked in to Alvar's Edge, where we decode the future before it arrives. See you in the next one.